Hey guys, this is RG and I'm back with another video. So today I'm bringing you an update to the 2020 crash portfolio. Please keep in mind that this is a very risky and speculative portfolio that I've put together. Some of the companies that have been hit the hardest as part of the 2020 crash. I also wanted to talk about the state of the economy, as well as the unemployment figures that recently came out. And then I also want to talk about a few of the stocks in here. Quickly, I just wanted to go over some of the holdings that I have here and the performance of specific individual stocks for the last week. So if you take a look, it looks like in the last week, my biggest performance have actually been GM. Not sure why. I think this company is going to be in for a rude awakening here shortly. But nevertheless, they actually did pretty well this week. Up 17.07% actually in just the last week. Toll Brothers, Viacom, Foot Locker. All four of those stocks are up over 10% in just the last week. Let's see, the worst performers of this last week looks like it's Dave & Buster's, Delta, Raytheon, Tapestry down about 2.5%, and American Airlines down 2.25%. So let's see what the overall performance is. So let's look at our overall gainer. So it looks like our overall best performance since I started this portfolio a few weeks back have been Toll Brothers, GM, Capri, Viacom, and Discover. Discover is actually one of the stocks that I like. Also EPD, Foot Locker, and Wynn, all up over 10% since I started the portfolio. Some of the worst performers is actually Raytheon, which again, this is one of the stocks that I actually really like in this portfolio. I think that'll do relatively well. It's a government contractor. They recently merged with United Technologies. So let's get into some of the individual stocks. So one of the first stocks that I wanted to talk about was Disney. They did have an earnings this week. I don't really want to get into the numbers just because I think that they're somewhat misleading. So the park really wasn't impacted as much as some people may believe. It only really impacted them for the last 2 weeks of the quarter. So I don't think that we're getting really an accurate portrayal of how hard this company may potentially get hit as we move forward. So I kind of wanted to talk about them just more generally, just because I don't think the numbers mean much. But nevertheless, profits were down 91%. I was actually surprised by this. It really seemed as if a lot of the industry analysts have all of a sudden gotten really bearish on Disney. And so many of them have actually downgraded the stock to a sell. Also keep in mind that their credit rating has recently been downgraded. It still has a pretty good credit rating, but nevertheless, it has been downgraded. Its dividend has been cut. They've let go of a lot of their employees. And then a lot of CEOs and a lot of executives have taken pay cuts. So things haven't really looked all that great for Disney lately. According to this article, they're indicating that ESPN will recover quickly. I'm not so sure of that. Every portion of the stock's business model is really getting hit pretty hard. Keep in mind that they have the theme parks, which they're both currently closed here in the U.S. Most movie theaters are currently shut down, and it's really taken a harsh hit. The other stock I wanted to talk about this week is Norwegian, one of the cruise lines that is going through some difficult times right now. They have started to indicate, especially this week, that they may have to seek bankruptcy protection. That does not bode well, I think, for the balance of the cruise line companies such as Royal and Carnival. I do have a 3% position within Carnival, so I just wanted to kind of quickly go over this. So if you take a look, it looks like they may have to seek bankruptcy protection. They're indicating that they're trying to raise $2 billion. I'm not sure if they're going to be able to do this. Right now, this company's not bringing in any type of cash flow. They've been significantly impacted by the global sickness. Keep in mind that the global sickness has a chance of returning in the fall as well as the winter. And if that happens, I just don't see how some of these companies are going to be able to service a lot of their debts. I don't think that they can survive. I think it's going to be a really difficult situation. And I think that a lot of these companies are going to have to file for bankruptcy. It wouldn't surprise me if Carnival did the same thing. Keep in mind that Carnival does have substantial liquidity, at least for the time being. It's going to be interesting to see how this company does with the large amount of debt on its balance sheet. I also wanted to talk about the airline industry. I thought there was a very good interview with one of the airline CEOs here from Southwest. I do have a couple positions in the portfolio. Keep in mind it is a speculative portfolio, so that's why they're in there. I have American Airlines as well as Delta, overall a 5% position. But I thought this was interesting because basically the CEO was indicating that unless the business climate improves considerably within the airline industry, they're expecting huge job cuts. They're either going to have to either let go or furlough just a very large proportion of their workforce. There is about a 90% decline in air travel. And so I'm not sure how really the airline industry is going to deal with this. The only way that they can deal with it is to really make substantial cutbacks. Currently, according to the interview, they're burning through about $1 billion a month. So their cash burn rate is high when you consider the fact that these companies, they have liquidity for now, but that liquidity is going to dry up pretty quickly. I think that these industries are going to have a tough time as we move forward. And I think that they're going to have an even tougher time if the global sickness returns. I think that at this point in time, a lot of portfolios and investors should be thinking about the fall and the winter. If the global sickness returns, I think that it's going to absolutely devastate some of these industries. Again, travel industries, hotels, retail, shopping, as well as some other industries, anything that involves, large groups of people congregating or getting together. I think that this is going to be incredibly impactful on a lot of those industries. So I think you have to begin to really prepare your portfolio for that. So as far as the economy is concerned, we had unemployment numbers that came out last week. The numbers definitely weren't good. Over 20 million jobs were lost in the month of April. The unemployment rate increased from about 4.5% up to almost 15%. It looks like it's at about 14.7%. Mnuchin was out there discussing this, and he indicated, actually, surprisingly, that he expects the numbers to get much worse before they get better. This was overall surprising to me, just because I felt that with many states reopening, that maybe a lot of them could jump back into the workforce and secure their old jobs back, but it looks like that may not happen. Now, I think that this is all really important just because a lot of people have been discussing inflation versus deflation. There's a lot of people out there who believe that we're going to be getting a lot of inflation because the Federal Reserve is using monetary policy. The federal government is exercising a whole lot of fiscal policy, and they believe that that's going to materialize in the real economy into just a lot of inflation out there. I think that for the time being, the biggest threat to the economy continues to be deflation. I don't see any inflation being generated just because I feel that overall aggregate demand is going to continue to remain weak, simply because we have so many unemployed people in the real economy. And this brings up another point. I think that what everyone has to look for is you have to look to see what a lot of the politicians are proposing. There's a lot of bills out there where they're proposing to inject or to put a lot of cash into the people's hands. There's a lot of bills right now that are proposing $2,000 into the average person's pockets. That has the potential of generating inflation eventually. I don't think that it's going to happen immediately, just because you have to remember that when people lose their jobs, once again, they're not looking to go out there and start spending. So I think that for the time being, deflation is the biggest threat. I think that if politicians use a tremendous amount of fiscal policy, however, and they adopt a bill that would be truly stimulative, then I think at that point, inflation has a chance of taking hold of the economy. And I think you want to be careful, because you want to, once inflation kicks in, you want to definitely be in assets. But I just don't see that happening anytime soon. I don't see that happening with an unemployment rate of over 10%. And I think in the time being, if the unemployment rate continues to increase, your best bet, if you're watching this, is to simply, first of all, number one, try to maintain your job. Continue to try to be cash flow positive month-to-month basis. Try to eliminate your debt and simply try to survive. We're in a really uncertain economic time in our country's history. So simply try to keep your head above water. Try to not do anything that's going to compromise your situation. And eventually, I think as the unemployment rates begin to drop throughout the various states, I think that eventually, if they go overboard with a lot of their fiscal policies, these policies have the chance of generating real inflation in our economy. One last thing, keep in mind that a lot of this fiscal policy has already been tried in a wide variety of countries. The perfect example, obviously, is Japan. So for years, the Japanese government actually ended up injecting a lot of liquidity into the market, and they actually started giving people free money there, according to some of my research. And what they found is that the more money that they printed into the economy, the less inflation it created, which is completely counterintuitive, right? You would think that the more money that you print, you would think that it would generate more inflation. However, they found that no matter what the Japanese central bank, along with the Japanese government, did, it still did not generate inflation because the money velocity continued to drop. Now, for those of you who may not know or not be aware, money velocity is the idea of being out there and spending money, basically. It's the number of times that a dollar bill gets spent or circulated. But basically, it's the idea of money being spent out in the real economy. So what the Japanese found is that even though they were giving people free money, right? They were giving people, I don't even know how much, but they were giving people free money. The Japanese culture was so conservative and they were so concerned about their overall economic situation that they would refuse to spend any of it. So then after that, the Japanese actually implemented additional policies in an attempt to get people to spend. So after they would give them free money, they would tell them, hey, you guys have 6 months to spend this 1,000 or 2,000 or 3,000. Well, not dollars, obviously, they have the yen. But they would tell them, you guys have a certain amount of time. And if you don't spend that money, we're going to take it back. And even after that, the Japanese would still not spend the money. And so when they did a lot of research to determine why that was happening, the main reason that the average Japanese person was still not spending was because they felt that even after that time frame would end, that the government basically still didn't have the guts to take that money back. So they said, we're better off just simply saving it and not spending it. Nevertheless, again, I know this is more of a stock investing video, but I wanted to explain a little bit of inflation and deflation. Feel free to let me know if you guys want to see a video, just because I think it's important. So those are my thoughts on this. So that's going to do it for the week 2 update. So far we're up approximately 6.63%. I do expect this portfolio to take a hit. I'm still expecting this market to probably retest the lows. I mean, I think I'm probably in the minority who believes that. There's a lot of the experts, the analysts out there who are saying that we're not going to be retesting the lows. I still think we are. I think that there's going to be a lot more economic uncertainty as we move forward, and I think that there's a pretty good chance that we're going to retest the lows. And anyways, let me know what you guys think. Will we retest the lows? Yes, no, maybe so, and then let me know why. I mean, ultimately, I think it's very hard to price in what's going to happen in Q2, and I think that as a lot of companies report their Q2 earnings, I think that a lot of these stocks are going to have to come down. That does it for this one. If you guys enjoyed the video, please feel free to hit the like button, subscribe if you want, and then I'll see you guys on the next one.